and we will pause whenever we get a quorum and establish a quorum and then continue on. We're going to start with House Committee Substitute for House Bill 2178, Representative Perkins. When you're ready, you can come forward. Just a reminder to all witnesses to fill out a witness form and leave it on the desk.
Thank you, Madam Chair. Chad Perkins. I represent Pike and Lincoln County in the House. House Bill 2178, and I'll be very brief for you. It includes it's the inclusion of subclasses 3 properties, and it provides a method to limit those increases to 15% or no more than 15% over a 2-year cycle. There are some other provisions within there, but that is the gist of it. And for the sake of being brief, I'll take any questions.
I would say that was very brief.
That's how we like to. We're really proud of being able to do that. So.
Great job.
I actually wish that everyone would do that.
I would concur with that sometimes, Representative. Senator Nicola, we just heard from Representative Perkins on his bill. If you want to take a quick look. Any questions, and I'll give you time to take a look. Any questions for the bill sponsor?
Yeah, thank you, Senator.
You're good? Okay.
Thank you.
Do we have anyone to testify in favor of House Committee Substitute for House Bill 2178? Please come forward at this time.
Good morning. My name's Butch Rigby. I'm from Kansas City, and I'm a property owner in Kansas City. I buy, renovate, distressed office building properties, and then hold them and lease them out to small businesses.
Hold 1 second. We're going to pause and establish a quorum so this will actually count.
All right.
Madam Secretary, please call the roll.
Senators Crawford.
Here.
Hudson. Here. Bratton. Nicola. Nuremberg. Weber.
We do have a quorum, and you may proceed.
All right, thank you. Yeah, I'm Butch Rigby. I buy, renovate, and develop old buildings, and I lease them out to small business. I'm here in support of the bill. I've done this for about 30 years. I have about 100 small business tenants. I don't do any national things like that. Most of my tenants are single offices or maybe 1,500 square feet or less. And like most persons, I use banks. I didn't start with any money. I roofed houses in college, so and we have to pass on any base year expense increases onto our tenants. And what we're here for is we understand that for decades the assessed values in Jackson County were a lot different than the market values in Jackson County. And this last year we had 600, 700% increases. And from our bank's perspective, we need to maintain a certain level of income versus our expenses, so those expenses are passed on, and they're very shocking to some of the small businesses. What I like about this bill is I understand we need to be properly assessed, and we need to pay the taxes that we should be paying like anybody else, but we're just looking for a way to limit that shock over a little bit of time. So 15% every 2 years is more than double the rate of inflation, but we can at least have our tenants, absorb that, and some of our own costs absorb that in a fashion that we can, live with it over a couple of 3-year cycles. Also, I, have a lot of small business owner friends who I've always encouraged to buy their buildings so they have something when they retire, to retire on other than their coffee roasting business. And one of them went from $300 to $4,000 a month on his tax, and he just was devastated, and it's devastating. And so we're here to support the bill, and just most small business owners in Kansas City and most commercial real estate are not owned by giant conglomerates. They're owned by people like myself who buy and renovate buildings, especially in Jackson County.
Thank you for your testimony. Questions for this witness? Senator Bratton.
Well, thank you for your testimony. It's just disheartening to hear, people invest, they buy these properties at X amount of dollars. They haven't sold. They haven't seen any realization of an increase, but yet they continue to get taxed at these levels when they haven't seen anything. So it's an unrealized gains taxation like we've never seen before. I mean, honestly, this is unbelievable. And I think this is a mandate and a charge for us to have to fix this out of control system.
Yeah, I would agree. For example, the building that I had, that the tax went up 600%. It went from $15,000 to $75,000. I haven't raised any rents. I'm on leases with most of my tenants. We will go in front of the BOE, but we haven't even, it's May, it's coming up on May a year afterwards, and we're still just getting our BOA hearings. And it's challenging. I mean, I certainly understand I need to pay tax and I need to build that in, but, you know, we set our lease rates and we set a base year. It is really challenging, not only for myself. I can't tell you how much sleep I've lost over, you know, these buildings, but really for my tenants and small buildings. And, you know, insurance has doubled, every costs are doubled, and rents are going down in commercial real estate. But, you know, I believe in small business. I think small business is truly still going to be the backbone of not only our city, our county, but our state and our country. And so all I want to do is, like, I hate to use the analogy, you put the frog in the water when it's cold and bring it up warm, they don't notice it, but you throw them in the hot water, it really is shocking.
Yeah. Well, I mean, the small businesses are the backbone, but I mean, government can absolutely break that backbone. And that's exactly, I think we're at that tipping point. You look at Kansas City, and this is one thing that's really frustrating. We saw April 7th, you know, the saying that we're broke, we can't fund our firefighters, our police, and we got to pass earnings tax, and, you know, people are already taxed into oblivion. And amazingly, it passes, and all of a sudden, we've got $600 million to throw towards a stadium. And it's just, you know, while all these taxpayers are literally being soaked and hit with all these increased costs, and when we see these assessments going insane, and people are like, well, that may not translate into taxation. Well, it absolutely translates into your insurance premiums, because that's what your insurers will look at, your assessment valuation as well.
Right.
So it is a hit no matter what. Whether or not they roll back levies, you're going to get hit with these sorts of things. So I don't want to belabor the point, but I want to thank you for your coming down here to testify, because it's ridiculous what people are having to put up
Well,
with.
again, I appreciate it, and again, we're not trying to, you know, dodge our tax. It'll eventually go up to the assessed level, but we are doing, and we will have opportunities still to fight the valuation methods. But boy, it's pretty hard right now under the current law, with all the burden thrown back at us if somebody has said it. So I appreciate your time and consideration on this. Happy to answer any other questions.
I don't have any questions, but thank you for your testimony.
My pleasure. Thank you.
Next up in favor?
Good morning. My name is Tad Berry. I am the Director of Client Service at Property Assessment Review. We are a firm that represents property taxpayers across Missouri and the appeal of their assessments. So we've got a lot of experience kind of in this, with the items in this bill. We are in support of the majority of this bill. There are some enhanced taxpayer protections that are in here. Obviously, with the massive increases in assessments that you've seen in Jackson County, there are a lot of appellants out there right now. And there are some things in this bill that would help them when they file an appeal to be successful in that appeal. Particularly, submitting an appraisal at the Board of Equalization level puts the burden of proof onto the assessor at that point. An appraisal is considered the gold standard of evidence, so to speak, so I don't find that particularly controversial. Interestingly enough, in St. Louis County, we've had appellants who have been successful at the State Tax Commission after 2 to 3 to 4 years of waiting, and then refunds are pending, but the collector there has taken 8 to 12 months to issue the refunds after that. So we find that very frustrating. There's a provision in here that would, if the refund is not issued after 30 days of the final order of the State Tax Commission, then interest would be applied at a double the typical rate. So it encourages the collector to do their job timely. On top of that, there are some reinforcements in here for the inspections. The 15% inspections that are required already under statute, it defines those a little better. It applies those to commercial properties as well. So having commercial properties increased by greater than 15%, the assessor would have to go out and at least take a look at them from publicly available areas. So overall, there's a lot in this bill. Oh, it also makes easier payment under protest for taxpayers, because while that has become kind of antiquated over time, believe it or not, there's a lot to be said about paying under protest when these go to the state tax commission, whether or not those funds are going to be available for refund when you're successful. A lot of our clients complain that their mortgage company pays their taxes out of escrow. It's near impossible to get a mortgage company to actually pay under protest for you. The current law as written requires it to be done at the same time. So basically with my check, I have to send in a letter saying I'm paying under protest, or if I want to pay online, how am I supposed to do that? This basically says up until the due date, I can actually just send a letter saying these are my taxes I've paid or am paying, or my mortgage has paid it, and I'm paying them under protest. So simple fix, but could be an important one as well. As far as the 15% cap and credit, I understand and appreciate the need for that and the desire for that, certainly out of Jackson County, where you've had these massive reassessments occur. I'm a little unsure how this would be implemented, and implementing it, I'm not sure if the consequences have been fully vetted at this point. We looked at if you were to apply a 15% cap in St. Louis County starting in 2015, and I use St. Louis County because that's the only county with good data available, where we can actually do this kind of research relatively easily. But from 2015 to 17, let's say you put that cap in place, it'd be a $125 million revenue hit to all the overall taxing districts. If you run that all the way through 25, which is the last reassessment cycle, we were over $1.6 billion in revenue loss due to a 15% cap. I'm not particularly mad about the revenue loss. It's just the problem is that, when you do that, the only other alternative for the taxing districts is to take the hit or raise their rates. So you go to the ballot, you raise your rates, or you go to your max ceiling on your levy. Okay, but if you're not at that 15% cap, if I'm below that, if I stay the same over the years, I'm at fair market value, the burden of this $1.6 billion hit is going to end up impacting me greater because the tax rate has to go up. My neighbors may all be capped at 15% over the years, but if I've stayed the same or relatively the same, that tax rate's going to go up. There's no other way to fund these taxing districts, and I got to pick up that burden. So in Jackson County, where you go 1,000, 4,000% increases, that's insane. But that's a factor of the assessor falling asleep at the wheel for 10 years or more, right, and not reassessing. It's a big hit to your taxpayer that may not see it, but it's a slow burn on this with a cap and credit. I'm not aware of any way to, it's a tax credit, so I'm not aware of any way for this to actually be recollected through any other means other than raising rates. So I think there's some unintended consequences there that I just want the committee to be aware of and be thoughtful of. And I'm happy to take any questions you may have.
Questions for this witness? Senator Nicola, I saw you first.
Thank you for your testimony. I appreciate it. Sorry I missed part of it. But I would like to ask you some questions on your last point. How would the 15% cap actually be a revenue loss?
Well, my understanding is it's a cap, and then there is a credit issued out. So if I hit a 15% cap, let's say I go up 30%. Well, there's a 15% increment that the collector is not able to realize there, and they have to issue that as a credit on the tax bill. So I see that as revenue that would not be collected under the cap, right? That's revenue lost.
How's it revenue lost if they didn't get it and it wasn't theirs to begin with?
Potential revenue or potential income lost, I suppose. But
so it's potential income loss over a 15% cap.
yes, sir.
Okay, but it's not revenue loss because it's not theirs to begin with, and it wasn't ever designated to be theirs, so it couldn't be a loss.
Well, it would have, save for this bill, it would be their revenue. Now, the rates, of course, would adjust downwards if they collected the full amount under Hancock, right? There's Hancock provisions to push the rates down. But if you're crediting out money out the back door, so to speak, I don't see how you can drop your rates because you're losing funding, and then you have inequality in who's paying what under that
So
umbrella.
is 15% too low?
I don't think it's too low. I don't know. My problem is that you have a lot of moving parts when you talk about finding fair market value, right? So if an assessor is on value in terms of looking at the county as a whole. 15% might be okay, but you're going to have properties, particularly in the commercial world, if you think about a vacant building that I'm trying to lease up, that's probably worth a quarter of what it's worth when I lease it up. So I could sign a lease, and overnight could double, triple, quadruple the value of my property based on the lease that I signed, and that value increase is not going to be captured in the next reassessment cycle, say for the 15% that's allowed. So that's the kind of thing with a cap that you end up with. There's just inequality in that, and I am for fair share and everybody getting a fair shake here, and there's going to be people getting breaks, and there's people that are going to be treated unfairly, frankly. If they're not at that cap, they're probably going to be taking a bigger hit of that tax burden.
Yeah, I understand, because I think no matter what we do, that's going to be the case. And especially in a county like Jackson, where I'm from, and the complete disaster that we've experienced. And what my real concern is that we put some kind of a cap to continue to stop these continued runaway. There's a lot of counties that are doing things fine, but unless we get a cap, somehow to protect the homeowner. Because in Jackson County in particular, and especially my district, we have a lot of elderly there. They have the 62, the senior tax freeze available to them. Not all have taken advantage of that. But we've got to protect property owners and property rights and do what we can there. And 15% is a lot of money. If there's a school district or a fire district or police, if they can't function with a 15% that's way over CPI, then they need to look at their own budgets.
Yes,
Because homeowners can't. We cannot sustain these increases year over year over year. We have to protect. So we've got to figure out a way. And I push back a little bit. That's why I did on you, because when we say revenue loss, it's not a revenue loss because they're not getting it. It's not theirs to begin with. It's the property owners. And so we've got to find a way to fix this. And I'm starting to lose hope with 3 weeks left of this session to actually get something accomplished. And we've got a disaster really statewide, but in our county. I mean, I was called yesterday by my county executive that is from a different party than I, and he wants something from a state level.
Yes, sir.
Because our county is in bad shape. But anyway, I appreciate your testimony, and thank you for being
sir.
here.
Yeah.
Senator Bratton.
I know you're testifying in support of the bill, so I mean this isn't hounding, but what was the purpose of Hancock, in your opinion?
To ensure that there's no windfall revenue increases to the taxing authorities with
And
assessment.
it was kind of limited
basis
towards
increases.
inflation, correct? I mean,
Correct.
that was the litmus test.
Correct.
So is 15% way above that?
It is, absolutely, yes.
So that's where I'm just like, we've got these taxing jurisdictions that have found loopholes within the Hancock and have allowed this system of, and I bring up unrealized gains taxation. These people with these properties have not seen any material gain whatsoever in their bank account, but yet they're being taxed at just insane amount of revenue going towards these taxing districts that have seen windfall after windfall just in 5 years. And that's where it like really, I hate even saying like the word trigger, but like when I hear that, oh, they're going to take these poor taxing districts, you're going to take it so hard. And it's like, what? when we're seeing all these people like doing everything they can just to even pay their tax bill because it's gone so crazy. So the taxpayers passed Hancock for the very purpose of keeping it as limited as possible. And if they want to go above the rate of inflation, then these taxing districts have to go to the vote of the people. And we've found these inroads, and we're trying to remedy that. And then that's where it is so maddening to me. I want my fire, I want my police, I want these guys to be able to provide those services. but not at the expense of where people are literally losing everything over it. So, again, I know you're here in support, and this isn't coming after you, but I just I want to push back on the narrative like these local taxing districts are going to be suffering, because when they've seen these windfalls, and the people that elected me and I represent have not seen any windfall. They've only seen net negative year after year after year. I don't feel sorry for that. So anyway, but I appreciate.
If you don't mind, I appreciate
Okay,
those
and
comments.
just, we have another committee in here in 10 minutes, and we have a long way to go. So if you'll,
Sorry, I've been.
yeah, sorry you guys didn't hear that. We've got to hurry.
Very, very briefly, again, the revenue and the runaway revenue to an extent, I understand that, and I'm okay with these lost revenues. It's the fact that if you cap it at 15, and in a county that's already at fair market value, right? So some may go up more than 15%, and that may be fair, just based on what market value does. But others are not going to go up by 15%, right? They may stay the same, they may go down. That entire tax burden, whatever it may be, whether it's too high or too low in terms of revenue, but that is shared via the tax rate. And so if someone is capped at 15% consecutively, and I'm still at 0 or going down in value, I am now picking up more than my fair share of that overall tax burden. And that's the hidden inequity within this. So, respectfully, thank you very much.
Thank you for your testimony. Please be sure and fill out a witness form and leave it on the table. How many more to testify on this bill? Okay, you're going to have to make it quick. Please.
Thank you, Madam Chair, members of the committee. Chris Ropey here on behalf of the Missouri Home Vacation Alliance, and I just specifically want to mention Section 137016 is a bill you all have heard and voted on in other committees, and dealing with short-term rentals, making sure they stay as residential property. Just want to mention, if you do keep that language in the bill that the House added, please use the version that is the Senate committee substitute for House Bill 1768. We worked out some language with the hotel motel industry on some of the verbiage in there, and happy to answer any questions. But if you do go forward, use that version, please.
Questions for this witness? Seeing none, next up in favor.
Good morning, Madam Chair, members of the committee. My name is Chris Maddox. I'm an attorney in Kansas City. I support this legislation because as an attorney, I represent property owners who are appealing their assessments. And I've done that for the past 8 years. My business has been booming. I'm here today to ask for you to take some of that work away from me by passing common sense reform that is incremental. It builds on existing frameworks that already exist in Missouri law and applies them to commercial property. I'd like to clarify one thing that 2 speakers ago. I don't believe that that 15% cap is a permanent cap. I believe that if there's a 30% increase in any 1 year, there's a 15% cap or a credit in that first reassessment cycle, but then in the subsequent 2-year period, you could then increase it another 15%. So that there's no permanent cap like there is with the senior tax credit. So this mechanism would work much the same way as the senior tax credit, except it's not permanent. It just spreads the increment out, the increase out over time. I know we're short on time, and so with that, I will end my testimony.
Questions for this witness? Seeing none, thank you for your testimony. Next up in favor. If there's anyone else in favor, come on up, please. Go ahead.
Madam Chair, members of the committee, my name is Ron Berry. I'm here as a registered lobbyist today on behalf of U.S. Capital Development. We just want to go on record in support. We appreciate this bill, and I think you'll find a lot of the same language in 1521, sponsored by Senator Nicola. Thank you.
Thank you. Questions? Seeing none. Next up in favor. Seeing none. Anyone in opposition? Come forward, please.
Madam Chair, members of the committee, thank you for the opportunity to be here today. My name is Kenny Moore. I'm the Boone County Assessor. I'm also here on behalf of the Missouri State Assessors Association. Requiring a physical inspection on a commercial property is a lot different than requiring a physical inspection on a residential property. That will require the assessors to hire additional staffing for the expertise on commercial properties. There's no funding in this bill to account for that cost. Moving on here. Appraisal report. Appraisals are done for various different purposes: mortgage, divorces, taxes. I can give you an example of a plan in Boone County where we litigated that. I had an appraisal from the complainant for $4 million. Our appraiser for the respondent, me, came in at $9 million. They ruled in, the State Tax Commission ruled in our favor for $9 million. So appraisals aren't always accurate. Sometimes they can be swayed. So that needs to be taken into consideration. Also, if an appraiser is, if an assessor is a real estate appraiser, he is bound by USPAP, Uniform Standards of Professional Appraisal Practices. Anytime he reviews or critiques an appraisal, he has to fall under standards 3 and 4. That requires a whole lot of work for the assessor to do that. He basically has to write not only a new appraisal report, but he also has to write as to why the differences are. So that needs to be taken into consideration. And finally, requiring the assessor to pay the litigants' fees if they lose the case at the circuit court level or above. That needs to be a two-way street. I have had examples where I've spent thousands of taxpayers' dollars preparing for a case, and the day before the case, before the hearing, it gets dropped. So that money is just gone. I've just thrown it away. So if we're going to hold the assessor to a standard where they have to pay the litigant, then I think it ought to be a two-way street. They ought to have to reimburse the assessor when they do something like that. There could be some possible resolutions to one of the first subject that I talked about.
Okay, we have another hearing to get to, so please wrap up your comments.
Okay,
I'm
real quick,
sorry.
real quick. Okay, dealing with the physical inspection on subclass 3, we could have an opt-in that the county could allow to do, or it could be up to the taxpayer to request that from the actual assessor. I'm complete. Any questions?
Thank you. I'm sorry. Questions? Seeing none. Anyone else in opposition? Seeing none. Anyone for informational purposes only? Seeing none. Representative, any final comments? Thank you. This will conclude the hearing on House Committee Substitute for House Bill 2178. Next up, Representative Billington, House Committee Substitute for House Bill 2944. And needless to say, we need to make it quick.
Good morning, Madam Chairman. I am representing Hardy Billington, District 152, representing Butler County. I here today to introduce House Bill 2944, law that county gives senior age to and older a tax-free on their main house. The tax bill say that were frozen as amount from that year. That saved senior money by protecting them from tax entry. But right now, senior mud, we apply every single year to keep that free. This bill made it easier for senior to try the tax free will automatic to 10 year. No more illegal paperwork. The trade at top only if the senior moved or passed away. This bill does a few other things. The state provided funding. The Department of Health and Senior Service would set a considered electronic portal to county to easy to check if someone had passed away. And no funding provided, the department would send each county a yearly list of debt recording in that county. The bill also gives senior at the time to mail their tax payment. If they mail by January the 5th, it count at on time. It let township accept partial or entire payment on taxes just like other county can. It let county attend tax day up to 30 days if they have problem printing or mailing the tax statement. I appreciate the opportunity. I'd be happy to take any treasure.
Thank you. Questions for the bill sponsor? Seeing none. First up in favor. How many do we have to testify on this bill? You're going to have to make it fast. I mean, they're waiting on us right now.
My name is Phil Rogers. I am the Andrew County Collector, and I am the co-legislative chair for the Missouri County Collectors Association. We are in favor of this bill. It is a good bill. It helps the people, like he said, the seniors. It also helps the township counties, of which Darlene is a township county. I already have it, given them that opportunity. I want to tell you that I've taken 50 people off tax sale and put them onto prepayments, and she wants that same opportunity, so we appreciate this bill.
That's what I hear. That is the big thing. That's a huge thing. Next up, are you finished?
Yes.
Questions? Next up in favor.
Hi, my name is Darlene Shipp, Township collector treasurer from Sheraton County, and I just want to be in support of that portion for sure to give me the same opportunity. Thank you.
Thank you. Questions for the witness?
No questions. I just want to say thank you very much for what you're doing.
Next up in favor? Seeing none. Next, anyone in opposition?
Madam Chair, members of the committee, Jorgen Schlemmer on behalf of the Fire Service Alliance, we are opposed to the bill. The structure of the underlying bill is problematic. The language in it complicates it. I will schedule time with each of you to come explain why that is.
Thank you. Next up in opposition. Oh, questions for him? Next up in opposition.
Hey, good morning, everyone. Missouri Hilario Lacar in opposition to HB2944. Number of concerns that we have regarding the renewal ongoing. We're in opposition. Thank you.
Thank you. I'm sorry.
Richard Sheets with Missouri Municipal League. Madam Chair, members of the committee, we're concerned about the debt service provision. We think debt service should be excluded because that would just shift that burden on all taxpayers. So we would ask that the debt service be removed from the bill.
Thank you. Questions for this witness? Seeing none. Next up in opposition. Anyone for informational purposes only? Representative, any final comments?
Thank you very much.
Thank you, and sorry for the rush. This will conclude the hearing on House Committee Substitute for House Bill 2944. We're adjourned.
I concur.
Yep, we'll do it.